Ladies and gentlemen, Kim here. Welcome to the daily update. You guys had a good day trading today. Market is up yet again, 0.3% on the S&P 500. Market continues to grind higher. It's been pretty much entire month of August, and as you can see here, it looks like we initially gapped up this morning, and then it fell, and it came down to the micro term pivot here. That was a prior resistance there, right? Because remember yesterday we gapped up and we started falling, so that level became a prior resistance, or that prior resistance became a new support. So that was the first hour. Second hour, we saw some fluctuation, right? That upper wick tells us that there were some moves up, there were some moves down. We ended the second hour kind of flat. And the third hour, we did come back down to retest that pivot here once again. We did see some buying activities, got back up, closed the third hour with a little bit of green body there, right? That was the first hour, or the third hour was the only time for the day we saw pretty solid green candle. And then the fourth hour, a little bit of pause, a little bit of fluctuation. Fifth hour got back above today's range there, that swing high there. We closed above it on the fifth hour. It looks like after that, market continued to march higher. So as you can see, the gap held. We continued higher, made a higher high, and continuing to make higher high there. And so now short-term support is at 342 and another one at 341. My short-term moving average is 341 now. And so if we zoom out, we can see that, and we talked about this yesterday, right? The gaps been holding every single time. There's a gap support here, gap support here, gap support here, and that was near the gap support there, gap support here, gap support here. And pretty much entire month of August, market is continuing to grind higher, continuing to march higher. And I think a lot of it is very much psychological. Sentiment is so bearish. So many people didn't expect this to happen. So many people are waiting for a big crash or some steep correction. And at the same time, a lot of people are thinking that, well, the S&P recover from the losses for COVID. Obviously, Nasdaq is well above it, and the fear has been sucked out of this market, despite what's happening with the virus and everything else. And now a lot of people are looking to potentially, if many people are missed out on this move because how scary it was, how dire the situation was back in March lows. Now everybody wants to see that pullback, right? I mean, both bulls and bears and cash people, everybody love to see some good 10% corrections, so that those people who's been waiting on a sideline, they can maybe buy those dips. Maybe some of the bears, now their stance maybe start changing now that you see that market didn't get into a bear market and getting into resuming. It seems to be resuming with this primary term uptrend, right? And at the same time, there will be maybe other bulls that maybe closed out already too early, right? And just watching this thing keep going higher without them, they want to see a pullback. And market is really great at creating environment like this and impute complacency in the market, right? So this is why, I think the best approach is, if you don't have any position, it's best not to chase it unless you're very short term. trying to short this obviously ain't gonna work because, you know, bears been getting burned pretty much entire last 4 months, and more severely so in the month of August. Because I think a lot of people thought that there's no way with the NASDAQ where it is. And I see so many posts on Twitter and other social media platforms that people are calling that this is like 1999, 2000 dot-com bubble crash scenario. I have a reasons to believe that it is not. It is not. We're not like 1999. So anyhow, so this is why, you know, how you can truly benefit from a move like this is, you know, obviously you had to accumulate and took a risk back in March lows, April lows, May lows, and June lows. And then as the market gets extended levels, and this is something that I've been, you know, explaining in the last several weekend videos, how to navigate this market. You guys remember those videos? How to navigate this extended market is you always want to have those long-term positions, and those you hold them for long-term. So that way, when market is keep on grinding higher like this, you got those long-term positions working for you. That's why you feel like you're always part of the market. But at the same time, so that's how my portfolio has been, how I was able to navigate this market is when the markets are getting extended this month, I started closing out my aggressive positions. Those are like call options because I had calls on everything, Spider, Diamond, Qs, IWM, XL, everything, all the indices. And I had some calls on the equities and stuff like that. And what I did was when the markets start getting overbought, right? And overbought doesn't mean the market is going to see a severe correction right away because they can stay. And if you ever learn anything about the bull market, they can stay very, very resilient. We've learned that in 2016 and 17. You know what I mean? You learn what it was like to deal with that bull market in 2016, how resilient that was. So this isn't something new. I don't know why everybody keep talking like this is, this like, oh, I've never seen a market like this. People are complaining about the bull market back in 2013, 14, 15. Whenever the market gets extended and keep grinding higher, everybody starts to complain. And they say it's so strange. I still remember 13, 14, 15 was known as the most hated bull market ever. And then, do you know what happened in 2016, 17? It trumped 2016-17 move made 2013, 14, 15 move like it's nothing. Even though the headlines read like this is the most hated bull market, all these people don't understand what's going on. And just look what's going on now in 2020 after COVID plunge. It seems like every couple of years this bull market comes and just shocks everyone. And that's kind of the the job of this market. Market always fools the majority. And this is something that I've been preaching for years. Always. So that's how you want to approach it. That's how you want to build your portfolio in a way that you have your long-term positions. And these positions you're going to hold several years, maybe 5 years, right? And then you got the more of a mid-term position. And then you got your short-term. So what happens is when the markets start getting extended, you start closing out your aggressive longs, right? Those call options, those triple shares, right? But you do hold on to maybe your index fund, obviously, right? And then your long-term holding shares on the individual equities. And that's how my portfolio has been set up. So even though I closed out my aggressive longs, and I'm still holding some of those aggressive longs, but I closed a lot of them recently, right? But I'm holding, my index fund. I'm holding long-term investments on the individual equities. So as the market keeps on marching higher, I'm totally cool with that. But at the same time, I don't mind a pullback, because I want to start getting back into those aggressive positions maybe some call options on indices, call options on some of the equities, maybe get back into some triple shares and double shares, things like that. Does that make sense? Looking at the oscillator here real quick, it's, we talked about, I've been using analogy of Michael Jordan, like creating space to shoot that fadeaway shot, and this market has been doing that pretty much entire month of August. This is first time I'm seeing this is a 65-minute chart oscillator holding up entire month of August on top of his band. I've seen these on the daily chart, but not on a 65-minute chart. This is the first time I'm seeing this staying up this long, right? So this tells us how adamant this market is, and every chance the bears trying to do something, right? Do something. Somehow, some way, bulls are creating space to make it run higher again, right? Because, we barely had, right here, you can see we barely pulled back. Look at the price. Price barely pulled back, but can you imagine oscillator actually came down halfway? And so that's what I mean, looking at the short term of things, that's what you call correcting through time. That's a correction through time. And while price is correcting through time, what does the oscillator do? Oscillator comes back down to where? The support area, and it created a space for itself so it can push higher. And then it corrects a little bit, and then another one, right? And then it pushes even higher. And in that process, what does the market do? Higher lows and higher highs. When the market is in an uptrend, you want to continue to give benefit of the doubt to the buyers. I don't know the last time. Last time we retested my midterm moving average was late July. And this entire month of August, we haven't touched my midterm moving average, right? If you watch my video entire month of August, when was the last time I said, it's about time, yeah, it's about time we're gonna hit that midterm moving average? Never, you never know. This is why you don't just come to a conclusion that something is gonna do something until you see a solid evidence of that. Even though on this day, I think that's the only time we saw any significant pullback back in August 11. And at that time, my moving average was right here. I wasn't going to say that it's going to hit it because we already had to go through the first support, which is a gap area. And the moving average was way below it. And you see how quickly market just got up, right? Really, just what happened here was just correcting through timing on the sideways move. And market creating space for itself so it can go for another offense again. Go to take that fadeaway shot, right? It's crowded up here. It's overbought. It's extended, right? There are a lot of defense over there. What the market is in creating a space, little bit of space by doing this, right? So that it can make a space for itself and shoot that fadeaway shot, and the market continues to go higher. It felt like it was just yesterday. We're talking about 320. It felt like it was yesterday. We're talking about 220, 330s. Can you believe they were printing new all-time highs every single day? So we want to continue to give benefit of the doubt to the buyers. And looks like, looking at my oscillator is getting into the overbought level. But now, because of where the oscillator is, that overbought sentiment is gone. Because last time we hit the overbought, that was 327. We're at 344. So market moved this much up to when it first hit that overbought level. We also talked about market getting into the higher low also. And then ever since then, we just moved sideways. So at this point, this oscillator is no longer useful to try to gauge if it's overbought, because that's overbought. Well, 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 that's overbought. Market kept going higher because my oscillator is elevated. It is no longer useful when it's in that state to try to pick overbought level. It worked before. When the market wasn't in that state, it worked flawlessly. And you guys saw me, analyzing my oscillator back and forth when we did have some turbulence in the market. We're talking April, we're talking May, we're talking June, and that oscillator was on the money, right? Pretty much every single time. But even now is on the money because now this market, the oscillator is telling us that, you know what, this market is furious at this point. We don't know how long this thing is gonna grind at the top of this band and the market keep marching higher. You thought maybe this was it. This is where we're gonna finally break down and we reset everything. It didn't. We got right back up. And it's no coincidence. It's no mistake. We found support right here, you know, right in that support. So let's continue to give benefit of the doubt to the buyers. We'll come back tomorrow, analyze this again for you guys. We'll go from there. Enjoy your evening. Good luck trading tomorrow.